Hi everyone, good morning, right? Good morning, good afternoon to where you guys are. I'm over here in Singapore, so it's really more of a good afternoon. Okay, so today you guys will be with me for the next 50 minutes to an hour or so, right? And we're going to be covering advanced trade management. Okay, so it's really more of breaking down a trade and what I really think about the anatomy of a trade and what I feel are the key factors. All right, so before I begin, I want to be sure that you guys can see my screen, all right, and hear me loud and clear. More importantly, all right, see the screen, okay? Not so much see my face, but more importantly, see the screen. Okay, so I've already previously done a sound check as sort of a preemptive measure, and the sound check works well. So I just hope you guys are able to hear me as well. If you guys got questions, just leave your questions in the question box. All right, thanks, Julian. Hi, Ivan. Okay, all good. Hi, Bartholomew. Hello. Great day to you. Okay, so since everything is going well, that's good. That's good. Right, I'm just gonna quickly go through this disclaimer. Now, I understand that information contained in this material is really intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. While FP markets have made every effort to ensure the accuracy of the information at the date of this webinar, at time of this webinar, FP markets does not give any warranty or representation to the accuracy, reliability, or completeness of the information provided here. But having said that, it is my duty as a presenter to ensure that what you guys get at this time of the presentation, the details and the data are correct. All right, so with that, let's begin. Okay, so just a little bit about me, right? Your speaker, my name is Isaac. I'm based here in Singapore. Okay, and yeah, I hold both the CMT, the Chartered Markets Technician, and the CFTE, that's the Certified Financial Technician designations. Okay, so those I hope gives you guys a bit more confidence into what I am sharing with all of you. Okay, and I will do my best to answer your questions. I like to keep things flowing and interactive with my attendees. So if you guys have any questions, just feel free to fire away. There are no stupid questions. All right, and I hope we can all learn together. Okay, so an hour is not going to be enough to talk about going to really do a deep dive into advanced trade management, but I will try my best to cover the key aspects, all right, or rather what I think are the major levels when it comes to trading. Okay, hi Gabriella, hi Travis. All right, familiar names. Okay, always nice to have familiar names around. Okay, so why is this trade management so important? Okay, you guys have done your analysis, you guys have done the cross assets correlation, or you guys have also done your multi-time frame analysis, and now you guys are ready to put into a put your trades in. Okay, but this is the tricky bit. Okay, the trickiest part of trading, I feel, is not so much the analysis. It is actually putting in the trade and waiting for the trade to play out. Okay, so I do not know the experience level over here in the number of attendees. I just want to know, okay, I'm sure some of you are experienced. I'm sure some of you probably even more experienced than me, right? Some of you really fairly new to this whole trading thing. But I just want to get a feel. How many of you, after putting in a trade into the markets, right, into the MT4, MT5, okay, and then the trade goes a bit in your favor, and then suddenly it reverses, takes you out, and then after that it continues happily again, strutting away in the direction that you originally did your analysis in. All right, so how many of you experienced that, right? So if you are an experienced trader, right, if you guys have many years of trading, okay, I'm sure this is something that is common. Okay, this is something that really happens to you guys right at the start of your trading journey. Okay, hopefully after 8 or 10 years of experience, this doesn't happen anymore. If this still happens, then it really means that as a trader, you haven't really grown in your journey. So personally, this has really happened to me many times. Okay, of course, at the start, right, just to share a bit with you guys, at the start when I started out trading, okay, it was losses after losses, accounts blown up after accounts blown up. All right, a person who tell you guys that You know, I've never blown up any account. That person is definitely lying. Okay, so over the course of my career, over the course of this 7 years that I've been trading, right, I have already blown up 4 accounts, right? So not something to be proud of, but I just want to keep it real, keep it honest. Okay, so that was the start of the journey, right? And then after that, I started getting better, knowing what I know, knowing what I do not know. Okay, and then that's when the real problem starts. All right, it will be good if I'm actually losing trades, then I know that I'm doing things wrongly. However, like some of you who have already been experiencing this, all right, many times I put in a trade, right, price, whether I'm long, right, price comes back, okay, pulls back, hits my entry, moves a bit in the direction of moves a bit in the bullish direction, and I'm like, yes, you know, trade is going just as how I've expected it. Next thing I know, huge pullback takes me out in my stop loss, and then after that I'm like, okay, maybe my analysis was wrong. But no, the market laughs in my face and says, haha, Isaac, you know, you got tricked. Now I'm going to go in the original direction that you actually analyzed. So this becomes a very frustrating phase, right? And I'm sure for those of you who are stuck in this phase right now, very, very frustrating. You guys know that your analysis is correct, but what is wrong? Okay, so in order to figure out what is wrong, I have put in some I will be looking at 4 main areas, okay, of a trade, right? And to help protect yourselves as a trader, to keep you guys in the game long enough, but at the same time to help you understand the trade better. All right, so you just see, okay, some of you, even though you're new, you're experiencing this already. All right, very frustrating. So let's start off with the anatomy of a trade, right? So before we actually put in a trade, we need to know what are the components of a trade. Okay, many times if you guys are on signal groups, right, it's just entry, stop loss, take profit. That's it, right? How many signal groups out there actually give you guys other levels to look at, right? So that is something that is very rare. Okay, this is the anatomy of a trade for me. There are many levels to this. All right, there are many levels to this, and each of them, all right, each of these factors have been broken down. Okay, all right, so Jim, right, I share your sentiment. Okay, I can assure you, you're not alone on this journey, right? It is painful, okay, but yeah, you know, the market always rewards risk, right? So a certain amount of risk, you get a certain amount of reward. So Jim, hang in there. Okay, so back to the anatomy of a trade. All right, I have put all these levels here in the order of importance. Okay, so this is my own personal view. All right, if you guys take a different view, you guys are definitely welcome to take a different view. You guys are definitely welcome to share this view with me, and then I would actually share it with all the attendees as well. All right, but for me, this is numero uno. Okay, let me just erase our drawing and change the color. All right, so numero uno. All right, most important, okay, most important to the least important. All right, so most important, okay, to the least important. Okay, I'm not saying that idea invalidation is not important at all, or trailing stop is not important at all. All right, but for me, when it comes to breaking down the trade, all right, the stop loss is really the most important level for me. All right, I took this from the superstars, traders that I really look up to, people like Paul Tudor Jones, people like Bruce Kaufner, right, Jesse Livermore, right? So some of these names you guys are familiar with. Okay, a lot of these traders that I look up to, they are not fundamental traders, but they are technical traders. Okay, so and a lot of them always talk about stop loss. All right, understanding your stop loss first, knowing when to get out, knowing when to bite the bullet and just get out. All right, so stop loss for me is really the most important factor when it comes to putting in a trade. If you get into a trade without knowing for sure where your stop loss is, then I think you're gonna be in a very dangerous trade to start off. Okay, so what is stop loss, right? What is stop loss? Is stop loss a level where you lose money? All right, some people say, you know, I had a friend who told me, you know, hey Isaac, why do you put a stop loss? Right? The moment you put a stop loss, it means that, you know, you will definitely lose money, right? If you don't have a stop loss, you will never have a losing trade, right? So he said it half jokingly, but I think he was pretty serious. Okay, but the difference is that he manages his trade very often. Okay, so he's actually sort of a very short-term trader. He looks at the 15, 30 minutes and sometimes even the 5-minute chart, right? So he manages his trade very very quickly, very tightly. Okay, so for him, stop loss is a no-go. The moment he has a stop loss, he kind of freeze. Okay, so yeah, Daniel, you're right. I hope he has clown pockets, deep pockets, right? I think it's more of a, he started off as a professional poker player and then now he's just dabbling in trading. Funny guy. Okay, but yes, so stop loss is important. All right, the next thing that is important is the entry. Okay, so you already know where you're going to get out of the markets, but if you don't even know where you're going to enter, then you're not going to earn any money, right? So for me, the second most important factor when it comes to taking a trade, all right, is the entry. All right, a lot of nowadays, right, especially with the whole coronavirus blowing up, I'm not sure whether it happens in your countries. I see some of you from Vanuatu, right? But over here in Singapore, you know, on Instagram, on Facebook, my feed is just blown up, right? I mean, there's the algorithm and all that, but my feed is just blown up with all these Instagrammers and Facebook traders that, you know, they just show that, you know, I have this 10 lot entry that I snipe it at right at the tip of the wick, right? And it looks so impressive. And then after that, I look at the entire picture, I don't see a stop loss level, right? So that really stumps me. Okay, so having that sniper entry, right, seems very impressive. It's a good thing. It's a good thing. But again, stop loss is more important, right? But on the topic of entry, it is important to know where to enter. Because when you figure out, okay, so when we figure out our stop loss and when we figure out our entry, the distance between our stop loss and the entry, the distance, right, that is the risk. That is our risk. That is how much we are willing to put on the table, right, in order to gain the reward. Okay, so very importantly, once we identify the stop loss, okay, we need to know where our entry is so that we can measure our risk accordingly. Okay, so once we're done with entry, then we can identify the take profit. Take profit is really quite easy to identify. Okay, sometimes, you know, people can ask me, right, hey Isaac, you know, I have no idea where the take profit is. You know, there isn't a nice Fibonacci level and whatnot, and I just tell them, okay, it's just simple. Take the next graphical high if you're going long, take the next graphical low if you're going short, right? Because price always reacts around a graphical level. Okay, so at the end of the day, right, the take profit level is not as important as the entry and the stop loss. Because why? Even if your trade moves 3 to 5 pips in your direction and you get out, you're still profitable, right? At the end of the day, you're still profitable. Okay, so take profit for me is not very important anymore. All right, now the distance between the take profit and the entry, that is your reward. Okay, so right from the start, you first need to know your risk. Sorry, that was meant to be a star. Okay, horrible at drawing with the mouse. Okay, so you first need to know your risk, and then after that, you can have your reward. Now, as a rule, personally, I'm a swing trader, right? So as a rule, I don't take any trades that has a risk to reward of anything less than 2.5. So every time I put $1 down, I need to gain back at least, I need to at least be certain that the probability when I win is 2.5 on that dollar. Okay, so that for me is my own personal benchmark, right? Some of you may have different kind of benchmarks. Okay, so maybe some of you like to go for that money shot, so you really wait very patiently, right, for that 1:10 kind of risk reward. Okay, so stop loss, entry, take profit. Now, one important thing that I'm going to be covering later will be the break-even level. Okay, that's a really cool name, the kid, right? Yeah, you like my risk reward. Okay, so thank you, thank you. I hope that's in line with you as well. Okay, so yes, Daniel, I saw your comment. Okay, trading is uncomfortable or should be, according to Richard Dennis. Okay, yeah, so Richard Dennis, yes, definitely somebody that I look up to as well. Yeah, trading is uncomfortable. It should also generally be boring, right? If trading is too easy for you, right? I actually shudder at the thought when somebody says that, oh, my trade, whenever I trade, is like a set and forget kind of thing. And if you take trading as a business, right, and you do that set and forget kind of thing, I don't think you run a business. You open your shop house, or you open your business to your clients, and then you just say, here's the deal, go do it, right? You're not going to take that kind of laid back approach. Okay, so trading should generally be uncomfortable. Okay, so VJ, you have a question. Okay, when you see market make big moves, there's a news. What is the risk when trading when the news is out? Okay, do I recommend it? Okay, so I guess to sum up your question, VJ, is really, do I trade when there's a high impact news coming out? Okay, and if I trade it, right, how do I mitigate the risk? Okay, so my answer to you, VJ, will be, what is your time frame as a trader? If you are an intraday trader, right, you're looking at a 1 hour, the 30 minutes chart, and you put your trades in on the 10 minutes, 15 minutes, or you put your trades in on the 1 hour, then my advice to you is, please stay away from trading around high impact news. Because if you go down to the charts and you look at the time when the high impact news, like the NFP, all right, the GDP, the interest rates are being released, you tend to see that the 1 hour candles are actually quite long. Okay, so it's very easy to get stopped out. However, as a swing trader, your stop loss is already generally quite wide, right? The style that I use, my stop loss is a bit wider. Okay, so I'm not that worried about high impact news. Okay, in fact, sometimes high impact news helps me to trigger my trade, right? So that is my style. So VJ, to answer your question, it depends on your time frame as a trader whether to trade around high impact news or not. The shorter time frame you are, the wiser it is to stay away from the high impact news timing, because there will be a lot of volatility, market whipsaws around. But the longer term that you are as a trader, right, then you don't have to worry so much about the high impact news and whether the whipsaw is going to get you out. All right, so VJ, I hope that answers your question. Okay, so back to break even. I will explain later why break even for me is an important level. Okay, and then after that, once we talk about break even, I will also explain why partial profit for me is also another important factor when looking at the anatomy of a trade. Now, I put trailing stop there as optional. I know that some of you actually use trailing stop. I have friends that swear by trailing stop, and they tell me, hey, Isaac, if you don't use trailing stop, you're giving away your profits to the market. And that is stupid, because you're supposed to protect your profits really, really crazily, right? For me, my counter to that is why I have partial profit. All right, I try not to move my stop loss as much as possible. Again, I won't say that I do not use trailing stop completely, right? I say it's optional because sometimes I use it, sometimes I don't. But why I have that freedom is because I practice this break even and this partial profit part of the trade quite religiously. So having the break even level and having the partial profit level allows me to be less stressed, okay, and I don't have to worry so much about the trailing stop. Okay, I will share that a bit more later, right? I really want to move on from this slide. And then, of course, finally, we talk about the idea invalidation. Now, idea invalidation, I will share with you guys also why this is an interesting factor to look at. All right, maybe some of you already use it in a manual manner. Some of you don't really use it as well. Okay, so some questions from Michael. What do I think about crypto? Is it short or long-term investment? Okay, Michael, please ask this question towards the end, because this is really about crypto. All right, not very related to advanced trade management strategy today, so I don't really want to waste time on this. No offense, okay, please. I will try to get back to it later. If I forget, just spam me towards the end, and then I will get back to your question, okay? Another question, is a step stop loss better than a trailing one for bigger time frames? Okay, a step stop loss, you can also say that to some certain extent is like a trailing stop, because when price moves a certain level and then after that you move your stop loss in line with it. Okay, so I do practice the step stop loss. I will share it with you when I have the chance to look at the charts. Okay, but I won't say that it is better than the trailing stop, whether on bigger time frame or lower time frame. All right, for me, sometimes after setting a step stop loss, after adjusting my stop loss, market comes back, takes me out completely, and then resumes in a in a direction again. Okay, so it can get a bit frustrating. All right, again, I have to say this is my style, so you guys are free to agree to disagree. All right, I don't take any offense. If there's a better practice out there, share it, and I'm also willing to look at it with an open mind. Okay, so Daniel, you're also saying you can also have the issue of active management and passive management. Some guys who make trading diaries and seen hundreds of them said passive was better, but I guess it depends on the personality. Yeah, it really depends. Okay, when it comes down to trading, there are people that trades based on fundamentals, and then there are people that trade based on technicals, right? So very, very different. All right, and then of course you have the biggest ETF firm out there, right? At the turn of the couple of decades, all right, Vanguard came out with this ETF and said that, hey, you know what, passive management is so much better than active management. All right, and a lot of debates between this passive and active. At the end of the day, if it works for you, it works for you. Stick to it. All right. Okay, so let's move on. Okay, so I just want to cover, all right, the anatomy of a trade, just looking at stop loss and looking at the take profit level. Now, this is a very, very simplified picture, right? A very, very simplified picture. Now, when we're looking at stop loss, okay, the definition for me, the stop loss, the way I define stop loss is the level, okay, which I am 100% wrong. Okay, so the markets, people will always tell you, you'll never get things 100% right in the markets. I agree, right? But you know for sure when you can get something 100% wrong in the markets. So that's the beauty of the markets, right? You will never get it right 100% of the time, but you know whether you're wrong 100% of the time. Okay, so you're wrong 100% of the time, okay, when your trade goes against you. All right, so in a very simplified manner, how we really do this is, in the markets price level, some people like to draw graphical levels, some people like to use supply and demand zone to zone trading, some people like to base off Fibonacci, some people like to base off indicators. All right, at the end of the day, very simple guiding point, price levels are never at a fixed level. Okay, of course I've heard of theories where institutional desks use the round number theory, that kind of things. Okay, so I've spoken to a few institutional traders before, and I asked them, hey, what do you guys think about this round number? So mixed. Some of them looked at it, and some of them told me, hey, Isaac, you actually believe that kind of rubbish. Okay, so I don't know whether he's trying to fluff me or not, right? Because maybe he doesn't want me to join the inside game kind of thing. But that being said, at the end of the day, a lot of price levels, okay, a lot of price levels are zones. Okay, it's always a zone, it's never a definite area. So when we have a stop loss, when we have identified a price level which I know I'm wrong, I tend to put my stop loss beyond. Like I'll probably adjust by about like 3 to 5 pips. Just okay, let's say I'm going short, right? In this example here, okay, let me just change the color. Okay, in this example here, let's say I'm going short. Okay, I'm going short. I enter somewhere here. This is my entry, right? I'm going short with my take profit at the last swing low. Okay, so very nice risk reward. Okay, there's a major resistance area here. All right, I will not put my stop loss exactly at this level. All right, this will not be my stop loss. My stop loss will be just slightly above, about another, I'll add another 3 to 5 pips on top of it. Okay, so another 3 to 5 pips. All right, this is when I'm doing a trade on a 1 hour. Okay, normally I'll add another 3 to 5 pips. When I'm doing another trade, a swing trade on the 4 hours, I generally add about 5 to 10 pips, right? Because the longer the duration of the trade, okay, the more price tends to move as well. You need to give your trade a bit of room to breathe. All right, so very simple guiding principle: stop loss beyond, okay, a major resistance or beyond a major support area. Okay, so this word here should be support. All right, so if I'm going short, then my stop loss should be beyond beyond a major resistance area. If I'm going long, right, if my entry is somewhere here, okay, my stop loss should be ideally beyond a major support area. So the keyword is stop loss beyond. Okay, and very simply, take profit before, right? Take profit before. Okay, so again, same principle. We never know for sure whether price will hit a graphical area. All right, sometimes, yeah, price goes close to a graphical area, and then after that it spikes to the graphical area, right? And then after that it immediately reverses. Okay, so we don't want to leave our take profit to chance. Okay, we want to just put it this way. All right, would you prefer to take 100% of the money off the table, or would you rather have a higher probability of just taking about 90% off the table? All right, it's about being more prudent. It's about taking the wiser choice. Now, I know some of you are really risk lovers out there. Okay, some of you are really risk lovers out there. You guys will probably say, you know, Isaac, I'm just going to leave it to chance and I'm going to take 100% off the table. All right, again, this is my own view. If it works for you, please stick to it. Okay, so take profit, we put it before, all right, a major support or major resistance area. Okay, so to sum it up, stop loss, okay, is beyond a key zone, and take profit is before a key zone. All right, so I hope this is clear for you guys. Okay, so Bartholomew asking, do I advise using Fibonacci level to set stop loss in zones? Okay, I do that when the Fibonacci level lines up with a very nice graphical level. If there are no graphical levels, sometimes I will put my stop loss just beyond the 61.8 Fibonacci level. If we are too close to the 61.8, I'll put my stop loss just beyond the 78.6 Fibonacci level. All right, so but again, it really depends on when I'm taking the trade. Okay, so I need to be very clear first where the major support is if I'm going long, or the major resistance is if I'm going short. Okay, so I hope that answers your question. Okay, got another question. How do I work out the room to breathe, the distance beyond? Surely I do not just eyeball it in. Yes, you're right. Okay, eyeballing is just like leaving it to chance, unless I'm super experienced, where, you know, I'm like this I have this divine eye that, you know, can tell me, okay, Isaac, this is the level. Generally what I do is I look at market structure, and then I put it a few pips under the market structure if I'm going long, or a few pips above the market structure if I'm going short. All right, so if there's chance later in the charts, I will show you guys. Okay, wow, time passing really fast. We're already 30 minutes in. Okay, let's try to speed things up, because I would like to show you guys on the charts. Okay, so we covered I've covered a bit of the stop loss and take profit. Now I just really want to talk about break-even levels. Okay, so Esther, this is for you. Okay, I'm talking about break-even. So what is break-even level? Okay, from a business point of view, right? I like to look at trading as a business point of view. Okay, even if you're doing it as a side hustle, even if you're doing it for spare pocket cash, it is still a business. Okay, there are people out there in the markets that want to take advantage of you and your business, so you have to do what it takes, all right, to protect your business. Okay, so that is essentially what the break-even level does. It protects. Okay, so the break-even level protects your positions. Okay, so, you know, again, how many of you imagine this scenario, right? The first scenario that I painted out for you guys. So let's say you're going long, okay? You're going long, okay? Your entry is here, okay? Price goes higher, comes back, touches your entry, goes higher, and then your stop loss is here. So price goes higher in your direction. Of course, you are happy. Wait, let me just draw that line for stop loss, okay? And then suddenly, right, you are sitting on very beautiful profits, and then suddenly bam, takes you out, right? And then from sitting on very beautiful profits, you guys are immediately sitting on ugly losses, right? I'm sure some of you would have experienced that. I have experienced that myself. Okay, so many times when the market moves against you, you guys want to be ready, okay, to protect yourself. All right, so that is essentially what the break-even level does. The break-even level protects you, protects the store owner, protects your business when the market moves against you. So how do I define the break-even level? The break-even level is essentially the level at which your profits equals your costs. All right, so this cost, especially when it comes to trading, all right, it'll talk about commissions. All right, it talks about swap rates. Okay, and if you actually pay tax, then yeah, it actually covers your taxes. So when you have a break-even level, all right, an example will be using this example, all right, you have an entry level over here. Okay, price goes up, triggers your entry, goes forward. Okay, goes forward, goes in your direction in a bullish environment. Your stop loss is here. Okay, instead of having a stop loss here now, right? Think of this as a trailing stop of sorts. Okay, you move your stop loss to a break-even level. Okay, I need to change the color. Okay, you move your stop loss to a break-even level over here. All right, so if price does come back down and take you out, okay, it drops all the way down, takes you out, you know, at the end of the day, you still have this small amount of profits that you have made that covers your commissions, covers your swaps, covers your taxes. Okay, if you make losses, not tax, right? But at least it covers your commissions and your swap. Okay, so Pride, you over here, you're saying that in such case, the stop loss could have been moved to the previous high just prior to the entry. Yes, you know, again, this is very subjective, right? If that is how you use it, then yeah, I agree. Then you can move to the previous high. Okay, but for me, my definition of break-even level is when the profits equals to the cost. Okay, so I have to have a bit of profit. Some people say that, oh, the break-even level very simply is just moving your stop loss to where you originally entered, but they actually forget to factor in the hidden costs like the commissions, the swaps, the taxes. Okay, okay, the kid, right? Really cool name. Okay, so you say that you agree that stop loss is the most important metrics. Thank you. And I use market structure to set it. All right. More specifically, you use 2.5 times ATR. So your stop loss is outside the volatility range for the time frame you're speculating. This works in tandem with the entry level, which addresses market structure. Thanks for sharing. Okay, so for you, the way you use stop loss is actually based on indicator. All right, so that works for you. Fantastic. And if that continues to work for you, continue using it, right? So for those of you out there who are looking for ways to, you know, set your stop loss level, 2.5 times ATR is one way that you can consider. I know generally speaking out there, people actually say, oh, I look at 1.5 times ATR, right? But hey, you know, if you want to give your trade a bit more room to breathe, setting it at 2.5 times is also completely acceptable. All right, so thanks a lot for sharing this. Okay, so Bartholomew, you're asking, is there anything like imaginary stop loss? I'm not sure what you mean by imaginary stop loss. So does it mean that, you know, it's just a stop loss level that you don't put on the chart at all, so you just leave it without a stop loss? All right, so I'll wait for you to explain your question and then I will get back to answering it. Okay, so yeah, so Prad, you're saying break-even level could also cover up for incidental exposure like brokerages and taxes. Yeah, you're right, absolutely right. Okay, so again, this is how I use the break even, right? I use the break even. I will show you guys later. When when I see very nice tidy profits, I tend to move my stop loss to break even. So there are multiple ways of choosing a break even level. Okay, these are just some of the two ways that I normally use my break even level. Either I use it by fixed pips, which means that price moves about 30 to 35 pips in my favor, then I immediately move my stop loss to break even. Okay, or I use market structure. Okay, so I just look at a market structure and then I move my break even to the nearest market structure to my entry. Okay, now as mentioned earlier, shared by one of our attendees over here. Okay, you can also use ATR. All right, so what time frame do I use my break even level on? Okay, this is another question. What time frame do I use my break even level on? Okay, generally, because I'm a swing trader, I use my break even on 4 hours, right? Either 4 hours, but if I take a trade on the 1 hour, then I have to use my break even on the 1 hour. Okay, so whenever I enter um, the whichever time frame that I use to enter the trade, that is where I start monitoring the break even. Okay, so I hope that answers your question. All right, so Esther, I hope this break-even slide is clear enough for you as well. And with that, let's move on to the next slide. Okay, partial profits. Okay, wait, let me erase our drawing. Okay, partial profits. When do we use partial profits? All right, so as I mentioned right at the start, generally I use break-even. This black and white thing, sorry. Okay, generally I use break-even together with partial profits. Okay, some of you, right, like let's say I have an entry over here, okay, and then price moves in my direction, right, and then my original stop loss was over here. Okay, so when price moves in my direction, let's say for example I use a fixed number of pips. Okay, so price has moved 30 to 35 pips in my favor. I will immediately move my stop loss to break even, okay, just slightly above my entry, to account for comms, taxes, swaps, all right, or hidden brokerage fees, all right, which I'm glad FP Markets doesn't have. Okay, a lot of bucket shops out there. There are some out there that actually has this kind of weird hidden transaction fees, but FP Markets, being a huge broker, doesn't have it. Okay, so once I move to break even, okay, what happens? Right, I am sitting on a tidy amount, a beautiful amount of profits. Okay, now as a swing trader, okay, so partial profits really is for those of you who are a longer term traders. Okay, so for those of you shorter term traders, I'm sorry, I don't particularly think partial profits are useful for you guys, right? Because if every day you are looking to back maybe around like 50 to 80 pips, okay, it is very possible, but there's really no need for partial profits, because once the market open, you tend to move a couple of 20, 30 pips already. Okay, so partial profits for me, I see more use, all right, on longer term trades, right? So swing trades. Okay, so let's say when I swing trade, I generally, like I say, I like to have 2.5 risk reward. Okay, so my take profit is somewhere over here. Example, take profit is over here. Okay, so take profit is over here, and market has moved about halfway towards my take profit, and it's a very nice level now. All right, so I move my stop loss to break even. I have no more stop loss in that sense. I only have a break even. Even if the market reverses against me, right, takes me out, I still break even, right, because of my break even level. But now I don't just want to protect my business, I still have to grow my business, right? It's not about just staying in this game long enough, all right? It's about growing the game, growing the business, whether slowly or quickly. At the end of the day, you still have to grow, because I always believe if you don't grow, you're dying. It's that simple, right? So now that price has moved in a very nice direction, all right, I will take partial profits. So I can actually take partial profits here, right? Now, partial profits really depends on the individual, right? Sometimes people want to take, maybe they want to close out half of their position, right? Some people want to close out 25% of their position. Some people want to close out 75% of their positions. Okay, so it's really up to you again, right? For me personally, if it really depends on the move, right? If the move is so explosive and I think that there's going to be a very strong pullback, then I'll close out 75%. All right, I'll close out more, right? But if the move is a slow and steady kind of thing, then my base guideline is I'll close out half of my position. All right, so I close out 50% at partial profits. I close out 50% of my position, and then I let the remaining 50%, right, run. I let the remaining 50% run to the final take profit. Now, of course, you know, some of you might say, hey, Isaac, that's not very wise. You know, you could max out your take profits, right? If you had left your entire position all the way to the TP, right? However, for me, this is how I manage my trade. All right, if you guys have a different way, please again share it, and I will gladly share it with the rest of the attendees. Okay. Okay, so some of you, okay, so got this comment. Why cap my winners and take partial profits? Let your winners ride and use a step stop loss. Okay, so the big runs up on the trade makes most of your yearly profits. Okay, so I would think that you are definitely a trend trader, trading in line with the trend. I agree. Let the winners run. Okay, and then use a step stop loss. Right. I have tried that style. However, for me personally, you see, yeah, so you agree, you're a trend trader. So from the way that it's being described, right, it's very obvious that you definitely have the patience to hold longer term than me, right? I don't have the patience to hold the trend, right? So I'm a swing trader. Even if the market moves in my direction, say for maybe about for a very long time, right? About 3 to 4 weeks. Okay, 4 weeks for me is like the maximum, and I will tend to look to how to reduce my exposure to the markets. Okay, so and based on my own experience, my style, sometimes, you know, price comes so close to my take profit, and then I just leave it there because I'm like, come on, man, give me that 2 pips, give me that 2 pips, and then suddenly it just reverses all the way, right? So that was what happened with Cat Yen for me recently, right? I will show you guys that towards the end, right? So it came so close to my take profit and then it reversed, right? So luckily I had my partial take profit. Not an issue for me. So again, there are many ways of doing this, but for me, partial profits is just how I use together with the break-even level. Okay, so another reason, let me just move on. All right, so over here I say, excuse the drawing, right? Over here I say that partial profits help to lock in profits. All right, true, it's not 100% of the profits, right? It's not the greatest amount of profits that you have, but profit nonetheless is still profit. All right, and I generally use it in conjunction with break-even levels. Okay, and it is especially useful for longer term traders. All right, so for me, the style I use it is a swing trade style. Okay, so partial profit for me is important, right? If I'm a trend trader, normally you just catch the trend as early as possible and then you ride it all the way. But as a swing trader, I like to swing both directions. So when price goes in the long-term trend direction, I'm playing with the trend. I take partial profits along the way, and then on pullbacks, I either play the short or I actually look for opportunities to compound my trades. So having this partial profit actually helps me to be able to compound my trades or flip the trade the other way and go short. All right, so that's just my style. Okay, so I agree, if you're a trend trader, if you can let your winners run, please let your winners run. If it is 100% conviction, high probability trade, it does not make sense, right, to close out the trade prematurely. Okay. So yeah, so these are the notes over here for partial profits. All right, and partial profit, I just wanted to show you guys very quickly, okay, why for me partial profit is something that is important as well. Let's just say I have my entry here, all right, and then I have my break even here, just an example, right? And price has actually pushed up, and then I take my partial profits. Now, if I don't take my partial profits, and then because of a news or because of a change in market sentiment, price tanks all the way, right? Having partial profits at the end of the day is still better than breaking even. All right, so that is why partial profit for me, okay, is useful. All right. Okay, so Daniel, you're asking, when I say I reduce exposure, have I scaled out already a few times by then, or is that the full position? Okay, yeah, sometimes I scale out. Okay, so an example will be just a very simplistic example, right? A very ideal example. Very rarely it happens, but this does happen. So I'm riding the trend, okay, and I'm entering on every pullback. I enter here, right, and then I see another pullback. I compound here. Along the way, I will take partial profits. All right, along the way, I'll take partial profits. And if actually price reverses, right, I can actually play the short. I can actually enter here for a short, go down, all right, and then after that, take partial profit again, all right, and then when price reaches a key graphical level, all right, I will compound my position and go long again. So all these levels then have their own break even. All right, all these levels have their break even, and that is how I actually ride the trend upwards. But it's a lot of active management along the way. All right, and like I said, very rare it happens, but when it happens, it works out very, very beautifully. Okay, so Daniel, I hope that answers your question. Okay, Prat, you also share it's important to make sure that the stop loss for the remaining trade is moved to the level where the partial profit was booked. Yes, okay, when price has moved a very far distance away, right, I will eventually step my stop loss, right, to the partial profits level or just towards the next market structure. All right, so that's why I say sometimes I still use stop loss or adjust or manually adjust my stop loss, which is like some sort of a modified trailing stop. Okay. Okay, Michelle, you're saying for day trader or swing, is there a certain time frame of the market that will give higher winning rates? I just have a question, Michelle. Are you based in Asia or are you over in the London or US timing? Because that really will affect, right? Okay, so you're KL based, right? Okay, so neighbor up north, right? So hello from Singapore. Okay, Asian markets generally, I wouldn't say it's 100% of the time, but Asian markets, I would say about 60 to 70% of the time is always a pullback. All right, the real moves, okay, happens during the London session. All right, and then after that, on the New York session, okay, sometimes we see an extended move, or sometimes we see a slight pullback. Okay, or yeah, so that is generally how it is. Okay, so 70% of the time Asian session is really the pullback. It is the best time for entry, and if you keep taking trades on the Asian session, you tend to think that, you know, price, you'll see that price moves in the direction for a while and then after it stops you out. Why? Because it's really that pullback, right? So Asian session is better for entry. The real move usually occurs on the London session, right? And then at the open of the US session, you see a slightly extended move of the original move from the London session, and then towards the end, a slight reversal on the US session. Okay, so this for me is what happens about 65 to 70% of the time, right? And yeah, that is usually what happens. Okay, based on my experience, right? I have to put the disclaimer out here that I have not statistically and properly back tested this, but over the course of the few years that I've been trading, this is what I see. All right, so just sharing it with you guys. All right, if you guys want to backtest this idea, please go ahead, backtest it. Next webinar, share it with me. All right. Okay, so that is partial profits. All right, we use partial profits in conjunction with break-even levels, especially for swing traders, day traders still possible. If you're intraday, if you're a scalper, not so useful for partial profits, right? I know of people who scalp, right, off key levels, and it's like 10 pips take profit, 10 pips stop loss, risk reward 1:1. works out beautifully for them. I have personally tried it. Very hard for me to grasp the concept, right? Maybe my mind is just not tuned to that kind of standard. Okay, and finally, very quickly, all right, I just want to end off with idea invalidation. I want to try to cover this in 5 minutes, and then after that, I'll just show you guys on 5 minutes, remaining 5 minutes on the charts. All right. So idea invalidation. What is idea invalidation? Right. Idea invalidation is very simply, okay, the level at which the original bias is proven wrong. So this is different from a stop loss. All right. Your stop loss is when you take a loss, right? Idea invalidation is when price doesn't even trigger your entry. It completely reverses and you know you are wrong. All right, so an idea invalidation is basically a level which you already know you're wrong without even taking a loss because your trade was not triggered at all. Okay, so there are multiple ways of choosing idea invalidation: market structure, support resistance, or by using indicators. Okay, so idea invalidation is very simple, right? I have this joke that I joke around with my colleagues, right? They just telling me, you know, hey Isaac, where's your idea invalidation level? And I just tell them, you know, I'm wrong only when I'm stopped out, right? But then there's a slight difference to it. Okay, idea invalidation occurs when your trade is not even triggered at all. So example, right? You have an entry over here. I'm always using bullish example, right? And then the market, you're playing a breakout, right? So the market comes up here, right? And then you're expecting it to break out. However, the market reverses. It does the double top, reverses, all right? And then you should have an idea invalidation level slightly lower. So once price breaks below this idea invalidation level, you know that, hey, this was never a bullish play to start with, right? This double top confirmed the bearish reversal. So this is where you're wrong. Another way of looking at it is, if this is your entry, okay, and then price breaks above, you're waiting for a pullback to enter. However, price just goes very strongly higher, all right? And then after that, it comes back down a bit and then it continues upwards. Now, when something like that happens, maybe you have an when a pullback happens, okay, and it doesn't even trigger your entry, you have an idea invalidation over here. Price pushes higher. It tells you, hey, you know, no point chasing the trade, right? Just let it go. Okay, it's just like that love that has been unrequited, and yeah, sometimes it's better to let it go than to hold on and feel the pain, right? So it's invalidated. Okay, so okay, so Ivan, you're saying a time-based stop loss can be used for that as well. Yeah, definitely. Okay, definitely. However, on MT4, MT5, a bit tougher to use this time-based stop loss, right? For me, idea invalidation, I just draw a level there that tells me, okay, you know, if market breaks below this level without triggering, I'm wrong, or market breaks above without triggering, I'm wrong. Okay, so very quickly, that is what idea invalidation is about. All right, so this is quite a simple concept to grasp. Okay, and finally, putting it all together. All right, this is really a very summarized, okay, a very summarized trading plan. All right, anatomy of the trade. Okay, so my trading plan is based on all this. Okay, so I will look at the charts. I also have my systematic, so I look at the charts, I do my analysis, but I have my rules, right? So I cannot, the way I draw my trend lines, the way I draw my Fibonacci, okay, these are my rules. And then of course I also have a proper system, right, with all the anatomy. Like I told you guys, that my system is first identify the stop loss. If I don't have the stop loss, right, I'm fighting a losing battle. All right, after I identify my stop loss, I need to identify my entry. So these are the two key levels for me. And then of course there's the break even, and then there's the partial profits, and I also have to have my risk reward ratio. Okay, so this is just a very quick summary of it all, and I hope to just go into the charts and just show you guys two examples. All right, two examples if possible. Okay, so Michelle is asking, how do I get a watch list for trading? Okay, so most watch list is very discretionary, is very customized to the trader. You know, what watch list are you talking about? Are you looking at equities? Are you looking at FX? Are you looking at commodities? All right, so generally speaking, you just want to create a watch list, a list of markets that you really like to look at, some favorite pairs that you like to look at. For me, I like to look at pound yen. I like to look at gold. I like to look at Aussie dollar, I like to look at dollar CAD. So those are always in my watch list. Okay, so for you, Michelle, you're asking for equities. All right, so equities, I generally don't have a watch list, but what I do is I look at the index. So let's say I look at the S&P, I look at the NASDAQ, right, and then I look at the Dow Jones, right. If I trade the Singapore markets, I look at the STI. So all the indices are correlated, right, with the S&P being the big brother. Okay, so if the S&P during the US session is bullish, then very simply the next day most likely the Asian equities will follow the US equities. Now I can say this with confidence because I really I started off my career being an equities analyst in the first place, looking at indices, looking at cross indices globally, right? So that is how I can say with confidence the behavior of the indices. Now, once I've identified the indices, okay, for me, I just set a filter and look at maybe the top 5 to top 10 traded stocks, and then I just go through them, okay, look at their charts. I don't really look at fundamentals unless it's really earnings season, but then I look at their charts and then I will do my analysis and I see which is the one that has the best risk reward, which is the one that has the nicest configuration, and then I can trade that equity. So example, if NASDAQ is bullish and then suddenly you do an analysis on Apple and Apple is very bearish, that should set your alarm bells ringing, right? Because Apple is one of the biggest counter on the NASDAQ. You shouldn't have the NASDAQ and Apple moving in different directions, okay? So I hope that gives you a sort of a framework to create your own watch list. Okay, Esther, you're saying, is there a time where stop loss cannot be identified? Okay, so I thought it's always possible to identify stop loss and take profit. So yes, there are times when stop loss cannot be identified, and if stop loss cannot be identified, then my advice to you is to use a trading stop loss in that event, right? So you have to set it maybe by a few pips, all right? Or if you really want to manually adjust it, then you have to manually adjust your stop loss in line with market structure, or every time price moves a few pips, then you manually adjust your stop loss. Okay, however, Esther, having said that, right, most of the time, more often than not, it is really possible to identify stop loss. Okay, like I said, you can never catch the top, you can never catch the bottom, you can never be right 100% of the times in the market, but you know for sure when you're wrong 100% of the time. All right, so let's quickly go to the chart. Okay, so I have over here pound dot. Okay, wait, let me show you guys CAD yen first, right? I wanted to show you guys CAD yen. Okay, so CAD yen, I took the trade on the 4-hour, I think, right? Let me just see. Yeah, so okay, so for CAD yen, right? This was a very simple trade, right? A very simple trade. Okay, market made a push up, right? So I'm just doing a quick retracement, okay, and then after that it came down to this 61.8 graphical level. This was really my entry, okay, 61.8, and then of course I have another Fibonacci retracement down here, all right, with take profit actually at this graphical level over here, right? This graphical level, this 50%. So this was my entry. Let me just change this entry very quickly, and this was my take profit. Okay, and then stop loss, right? Stop loss was outside of market structure. How do I, at the time it was somewhere like that, right? Price was something like that. Okay, I was expecting price to push lower because on the bigger time frame there was actually this ascending trend line support, so I was actually waiting for price to come back down to this 61, right, to test this 61, and then after that push higher at least to this level. Okay, so that was my quick analysis, right? And then my stop loss, very simple, outside market structure. If I look over here, where's the structure is still currently being formed. If I looked over here, this structure is too wide. It does not make sense for me to put my stop loss over here, right? The risk reward is not going to be good. Okay, so where I actually put my stop loss was just outside of this trend line. For me, price should form a structure above trend line, and if I were to do a retracement, right, it's just slightly above my 78.6. Okay, so like I said, my stop loss sometimes I put it at 61, sometimes I put it at 78.6. All right, but it really depends. Okay, and most of the time I use it outside of market structure. So this was my level, relatively fair risk reward. Okay, so what happened? Price came back down, triggered, okay, and then after that it sort of moved sideways, okay, and then there was this red arrow, there was this red candle, right? And for me, I felt that, okay, you know, when I saw this happening, I was like, okay, this red candle, strong rejection, maybe the real take profit level should have been this area here graphically, right? And I'm really missing my take profit. So what I did was I moved my trade to break even, right? My stop loss became break even level. I protected it, and then I closed out 50% of my position, right? Because I'm like, okay, this is something that most likely the trade is going to go against me. It's not even going to go to my take profit anymore. All right. So I closed out 50% of my position, and what happened after that, right? Price touched my take profit, closed out the remaining 50, and started reversing. Okay, so for me, this was a trade that worked out, and then immediately I told myself that, okay, now that my take profit has been reached, and it seems like price is having a tough time breaking this 50% retracement, I'm going to wait. Okay, I'm going to wait for price to break. This trend line is still holding, so I'm going to wait for price to break below this trend line. Okay, and then I'll enter on a pullback, right? So my entry was somewhere over here, right? Very quickly, my entry was somewhere over here on the trend line pullback. Okay, so on the trend line pullback, and then where was my stop loss? My stop loss was simply outside of structure, right? There's this structure over here, right? And then I just put it out there. Okay, there was no breakout after that. Okay, there was no clear breakout, but when price broke out, it came back, right? It missed my entry. Okay, it missed my entry. It went all the way down. I told myself, hey, I was actually looking at it. I didn't have any idea invalidation levels, so I used manual idea invalidation. So when price came down lower, I was telling myself, hey, look at the market structure, right? Lower highs, lower lows. I think we're in a downtrend. Let me cancel this trade. So I closed this trade out. So when I closed the trade out, what happened? Price reversed, okay, and I was like, oh man, I could have gotten that trade, but then price would have stopped me out. So the idea invalidation actually protected me. All right, so that was CAD yen. Okay, very quickly, there was also a pound dollar trade. Okay, so pound dollar trade was a bit nicer on the, I actually entered on the daily for this. Okay, a bit hard to see, but in closing, hey, there was this trend line breakout pullback, right? I actually entered over here on the breakout of the trend line. Okay, a pullback, and then after that on the 1 hour, okay, on the 1 hour the entry was here. It wasn't the nicest entry, right? It wasn't the nicest entry. Okay, so this was the entry. Now, where was my stop loss going to be? Look to the left, the only structure that I could see is this level here. This is my stop loss. Okay, so I put my stop loss slightly higher. All right, and then very simply, because I did the analysis on the daily, my take profit, okay, like I told you guys, my take profit when there was this trend line breakout and pullback, my take profit was actually at the last swing low here. Okay, so a very nice swing trade on the daily with a very good risk reward. Okay, with very good risk reward. All right, so back to the 1 hour. Look what happened. Okay, my entry was here. Price went all the way down. I did not move to break even. Okay, I did not move to break even. Price went all the way down. I hardly moved my stop loss, right? Price went all the way down. I actually had a partial take profit, right, in this zone over here, right, in this zone over here. Why did I use this zone? Because there was actually this supply and demand candle for me, right? So I actually had a take profit in this zone. To be honest, it was actually over here, right? So I closed out 75% of my position. Price reversed all the way, tapped my entry again. Okay, and at this point in time, I thought, okay, yeah, I'm going to be stopped out, right? So I really was thinking maybe I should move my stop loss. However, my analysis on the daily was still below this trend line, right? We didn't even integrate this trend line. So I told myself, okay, you know what? This trade is still valid. And then after that, price went all the way down, closed out 25% of my position. I did not compound this trade because of the huge, price came all the way down, took out the remaining 25% of my position. I did not compound this trade over here, right? Because of how price barely even came close to my final take profit, and then after that it reversed. Okay, I don't like this big movement, so this was not a compounded trade, it was just a trade that worked out nicely. Okay, so got a few questions. Okay, very quickly I want to answer. Okay, so VJ, you're asking, you're a bit confused with gold, the way it's moving. What are the key levels to enter right now for a gold trade? If you have time, I will get to it. Okay, some of you are talking about gold, so I will look at that daily time frame. Bartholomew asking, do I set a pending order or wait for confirmation candle before entering? Right, for me, I use pending order more often. All right, but that's because of my experience. I like to see market doing pullbacks. Okay, so I tend to wait for the pullback, and then I will trigger my pending order. All right, so Michael, yeah, you asked a question about crypto. What's the best way to identify stop loss and take profit in a volatile market like crypto? Right, for me, a lot of my stop loss is based on market structure, especially in line with Fibonacci levels. Okay, so I'm just going to jump over to Bitcoin very quickly. Okay, Bitcoin, things like this, right? Okay, I need to do a full analysis. Okay, but I'm thinking Bitcoin right now, we should see prices pushing higher. Why? Because there is actually a trend line breakout. Okay, but price is currently reversing on the daily. There's this reversal. So let's go down to a lower time frame on a 1 hour. Right, it looks like price is making lower highs. So in terms of market structure, we are seeing lower highs. Okay, at the same time, there is a structure over here. Okay, that price is holding very nicely. So for things like this, I will actually wait for a breakout, right? I'll wait for a break of this before I actually go short, right, to the trend line pullback. Okay, remember on the daily, we have yet to do a trend line breakout pullback, right? I love to look for pullback. So there's a breakout. Now we just have to wait for a pullback before prices go higher. So I'm just playing this short-term pullback on Bitcoin. Just an example, right? Short-term pullback over here, and if I'll do a retracement of the last move, low to high, okay, it falls in line with the 50%. Look to the left, graphically, the daily trend line falls in line with this graphical swing high, falls in line with this 50%. Very nice take profit level. Stop loss will be outside of market structure, somewhere over here. Not the best trade because this is not really 1:2.5, but 1:2, still fairly acceptable. So I'll enter with a small position size. All right, so this is how I look at a trade. All right, I already have identified this market structure, so I already know that my stop loss will be outside of this market structure, right? So because I've identified this market structure, I'm able to quickly identify my stop loss, and I'm quickly able to identify if price does a breakout, this will be my breakout entry. All right, Michael, I hope this gives you a bit of an insight. All right, and finally, I know some of you, if you guys have to leave, please go ahead. I don't want to take up too much of your time, but let's take a look at gold, right? Because some of you are really looking at gold. All right, sorry, let me just go back to the chart. Okay, so gold on the, for me right now, on the monthly is really testing a very key level here, key resistance level. On the weekly, we are also on the key resistance level. There is this 3 black crows pattern, but since we're only at the start of the week, I cannot really confirm that. But long-term target, if price really reverses and breaks below the 23.6%, I'm thinking price could drop all the way to the 61.8 level. So this is a very long-term swing target. All right, let's go down to the daily. Okay, daily. Okay, we have this, okay, for me, daily definitely bearish because we have actually broken this trend line already. Right, so breaking this trend line, I like to look for a pullback. Okay, and pullback, it can either happen to this graphical level, or it can pull back to this swing high again, right? Which is really very, which is also plausible. There's on the 4 hour, there's a short-term trend line. There's like that very ugly trend line actually. Okay, but there's a zigzag, right? So I just know that right now, if I'm a swing trader, okay, on the daily, just want to look at 100%, right? Price came close to 100%. So on the daily, very clear cut, my stop loss will be over here. All right, over here. In close is just above this structure here, this small structure over here. Okay, so once I have my stop loss zone identified, okay, the key is now to look for an entry and then finally my take profit. Okay, so for gold, right, let's see whether I answer the questions. Okay, you're shorting gold, all right. Yeah, my take profit level long term 1766 if price breaks the 23.6% in terms of Fibonacci. Okay, VJ, I hope this answers your question as well. The key stop loss, the key resistance level for me is 1903. All right, I have a key intermediate support, which is at 100% extension level at 1840. So these are my key levels for you, VJ. All right, and then okay, and then Michael, you're asking why be giving a Fibonacci webinar. I don't think we have a Fibonacci topic coming up soon, but you can actually give that feedback, and I think the FP team will actually take this into consideration. Michelle, may you ask? Yeah, you can ask me what's my outlook for the US market. Do I think it will continue and rise higher for this coming summer? Well, personally, if you ask me, I think it's just really bullish for. I'm just going to look at the S&P, okay? Because I like looking at the S&P. All right. Now the S&P, all right, is actually in a very bullish configuration. All right, it is in a very bullish configuration. But right now, the price action on the S&P is really sort of a slowly inching upwards kind of thing, even though they are making all-time high. Okay, on the 4-hour, all right, price is holding above this long-term trend line. Okay, so definitely still bullish. But because of the slow drift, right, I am not very convinced that the bullish move will last long. I am long-term bullish on the, I'm just going to put this systematically. I'm long-term bullish on the S&P index, right? However, to be very convinced, okay, we need a very strong catalyst. All right, so maybe finally out of nowhere the coronavirus just disappeared. Okay, coronavirus just disappeared. All right, so bullish on the S&P, right? Out of 3-star conviction, I'll give a 1-star conviction because, like I said, I don't like the price action now. I want to see a clearer push. Okay, so Ivan, you are sharing. Okay, warning sign is Dow is not making new historic highs. Okay, so thanks for pointing that out, Ivan. But I also will have to caution you right now that there's a slight dichotomy between the S&P and the Dow. Traditionally, they tend to move together. However, now because of the tech boom, right, tech has been really leading the push. All right, and the Dow traditionally does not consist of any tech companies, which is why it is sort of lagging behind. All right, so there are people saying that okay, Dow is lagging behind the S&P. On the flip side, you also have people like what you're pointing out, the Dow is not making any new highs, so that's something to be cautious about. So thanks for pointing that out, Ivan. Again, like I said, I'm 1-star bullish on the S&P. All right, as a technical analyst, I strongly believe in momentum. Momentum is a very big and unseen factor in the stock markets, so this is something that I'm leaning more towards. Okay, so yeah, definitely something interesting to look at. All right, so with that, guys, if you guys have any questions, any feedbacks, right, you guys can actually email support@fpmarkets.com. Otherwise, you can go to fpmarkets.com/trading-webinars/ and register for the next webinar. All right, so the next webinars are all over there. Okay, so sorry guys, taken up more of your time than I expected. All right, I wish you guys all the best. Trade safe, stay safe, and I'll catch you guys again. All right, take care and goodbye.